All right, everybody, what a week this week. The Bears got absolutely crushed this past week with relentless upward momentum causing a gamma squeeze as more and more bears were forced to cover their short bets and hitting all of our upside targets. For the week ahead, we have immediate overhead resistance is seen around 5480 to 5500, which was the peak of a recent rebound. The April 9th rally high was 5481, and roughly the 50% retracement of the February-April decline. We're absolutely crushing these levels in our Discord, and if you would like to get in on the action or get an instant email when we place a trade in our One account several times a day, I'll drop a link to our Patreon in the description below. This area also converges with the falling 50-day moving average, making it a formidable short-term ceiling. A break above 5,500 would neutralize much of the recent downside momentum and could signal a run toward the next upside resistance levels. On the weekly chart, the declining 9-day moving average, or Bravo 9, is a short-term resistance level that aligns with the breakdown candle of March 9th should the bears fumble the ball again and price action continue its relentless campaign to decimate the bears and break above and hold that level. The 5,600 level is an intermediate resistance to watch, near the underside of the prior uptrend channel. Above that, the 5,767 level is a confluence of the declining 20-period moving average on the weekly, and the broken neckline from the massive double top pattern area is the next level that the bulls will want to overcome. The ultimate hurdle is the 6,150. 6,200 zone near the all-time high, record closing high on Feb 19, 2025. This remains major resistance and the bullish objective if the longer-term uptrend continues to crush the bears. On the downside, the 4820, 4835 zone is a critical support region marked by the early April low and roughly aligning with the prior all-time high from January 2022. A drop below the April 7th swing low, around 4-20, could open the door to a deeper decline toward the mid-4500s. Any break of the 4800 level would likely trigger a massive avalanche of stop-loss orders, as that would trigger a major trend line break and technical sellers would emerge. If 4800 fails decisively, the next major support on weekly charts sits around 4500. Which technicians cite as a downside target in a bearish scenario. This is the S&P 500 chart below, on a 120-minute, 2-hour time frame. You're looking at trend lines, moving averages, RSI 14, and some clear structural breakouts developing, and this red downtrend line is the dominant downtrend line from March. Price is currently testing this red line, and we are literally right at the breakout point, and the question is, will we see follow-through on this on Monday or Tuesday? This is a descending, broadening wedge pattern where we see two trend lines diverge from each other downward, with the lower trend line falling at a sharper pace than the upper trend line. This pattern is often seen as a bullish reversal pattern, suggesting a potential upward movement after a long downtrend. What I like about this stock chart pattern for SPY is that the target level can be estimated by measuring the height of the wedge and projecting it upward from the breakout point, which in this case is around the 6,145 or so level, which would close the unfilled gap left open. It's worth noting, however, that even though the descending, broadening wedge pattern sometimes indicates a potential reversal, there's also a possibility of the downtrend resuming also because this particular pattern has an extremely poor chance of holding a bullish reversal. If S&P 500 can break and close above, say above 5535, 5540, on a 2-hour candle close, then we likely see a strong momentum continuation rally next week. This aligns perfectly with the Zweig breadth thrust that recently fired, which favors more upside. If this breakout gets confirmed on Monday or Tuesday at the latest, the first target would be around 5635 to 5640. That's the 0.617 fib retracement from the recent swing high to swing low, and the second target is around the 5735 to 5750 level, and that's the broken support area from late March and early April. Likely becomes resistance on the way up. So support levels I'm watching right now are 5453, which is the 21 EMA, and 5334, which is a critical must-hold zone. Break below here would be bearish. So let's do a quick recap. If SPX breaks and holds above Friday's highs, 5525 zone, 0.618 Fibonacci retracement level, and the RSI is already strong, 63, so a breakout could fuel a bigger short covering rally. Also, Zweig breadth thrust historically leads to strong follow-through. Just in case scenario, we just need a backup plan in case this thing goes sideways, and if SPX rejects around Friday's highs, can't hold 5525, we need to watch the first support. 5450 to 5460. 20 EMA zone, recent pivot, and stronger support, 5350 to 5360. Confluence with old breakout. And another thing to watch is breadth to remain positive unless we close under 5350. So for Monday, above 5525 is our roadmap toward 5638 to 5859. Below 5525 and fail Eagles backtest 5450, maybe 5350. Hope everyone has an amazing weekend and also hope to hang out with you guys in our Patreon Discord. Until the next time.